Guys, good evening. Pratheesh here. Okay, this is a short video about tomorrow's expiry. So tomorrow we have both expiries coming on the same day. That is Nifty and Bank Nifty. Because Thursday is the holiday, so Nifty expiry also comes tomorrow. So we'll see quickly what is likely to be expected on a expiry day with respect to both index. Okay, before looking into that, we'll take a short analysis of what happened today and what is likely to happen on the expiry. So today, you can see here, this is a Nifty chart, what I'm showing it for you. So Nifty, what happened was we had a 5-day consolidation was there. Okay, this was this 5-day consolidation. And yesterday we gave a clean breakout about this 5-day consolidation, but the breakout ended as a kind of a short covering profile. We thought that it will go like a trending mode, but at one point of time it was trending, but later what happened, the momentum got faded and started coming down, and we closed kind of a short covering profile. Okay, and we got a strong buying tail yesterday. So this buying tail was considered as a good support. So for any weakness, any market weakness to happen, the first thing we need to monitor is that price coming inside this single print or inside this tail and accepting inside this tail. So there could be some kind of weakness. So if this happens, then probably the midpoint of the balance will be your target. Okay, they will drop it immediately towards the midpoint, and later on there will be bounce, or if the midpoint breaks, then they can target the lower extreme also. Okay, 420, 440 levels. So that is where multiple times we started bouncing. Okay, so this was the bias that we had yesterday. And for upside what happened now, we need to break this short covering profile high. The short covering is kind of a profile which makes the market weak. Okay, that means whoever had shorts within this 5-day consolidation, they covered that actually. And for now fresh business to come, we need fresh buying to emerge above this day high. Then only we can say that, okay, a fresh buying has come into the market, so that we are likely to go up. And if that is not happening and price is rotating inside this P-shaped profile, then this becomes a composite P. Okay, single day P is quite bullish structure, but composite P is not that great. A bullish structure. A composite P can be of 2 days composite or can be of 3 days composite, whatever it is not that great structure to look for a bullish trades. Okay, so that was the case actually. Now today what happened was Nifty opened with a large gap above the previous day high. So normally gap opening in market profile will be above the range. Okay, either it should be above the previous day high or it should be below the previous day low. To call it as a gap up opening, there is a kind of a true gap. So we opened higher because at the opening you can see there was some kind of profit booking from the order flow and other order flow related data points. We could sense that there are some kind of profit booking happening at the opening. Opening it went, and there was a 2 ticks. It went up from the open and then started liquidating down due to this profit booking. I thought it could take support around previous day high, but it again started back coming into the POC of the previous day. And previous day, what happens now? This POC was slightly aligned with respect to support of the bulls because POC was near value area high. Okay, the what is that? Green color shades. The volume profile is your value zone, and above that is something above the value, and this is below the value. So this is value area low, this is value area high, this is POC. So we had a POC shift near this value area high at closing. So that was advantage for bulls. So that POC is an important support for the next session. So below that, we could test the value area low and even the tail. And acceptance of the tail, then further weakness. This was the bias actually. So we opened gap up, came down, test this high, then they came around this VPOC. Near the VPOC, we saw some responsive buying coming into the order flow. They started pushing higher. Okay, but again, they could not get any momentum above that. We went above the IB. Okay, since it is a, what is that? Gap up opening. We started going down, responsive bias pushing it up. So we expected a kind of breakout or breakout to happen in the C period, but that C period turned out to be a probable FA. What do you mean by probable FA? Probable FA is something like price opens. So price try to trade above the IB. Okay, they are looking for a 1 hour breakout. Okay, 1 hour high and low we call it as IB low and high. So price was trying to make a breakout above the 1 hour high, but unable to do that. And the most important thing is that it has to close inside the IB in the same candle, the same time frame. We normally use 30-minute time frame to monitor this FA. So within the 30-minute time frame, it has to close inside this initial balance. So it went up, and we saw that the price was closing inside the IB. So kind of a probable FA. So people call this an FA, but this is not an FA. This is a probable FA. Why? Because for FA to get confirmed, we need to go and break the other side of the IB. Then only this FA gets confirmed. So till that is not happening, this could be a probable FA. Later, this can get confirmed. We don't know at that point of time, we don't know, but there is always a trade that you can take with respect to this probable FA. So this FA high, at any case, price comes very closer to this FA high, you should reject immediately. So that is the advantage that, okay, the FA, the people who created that FAs are really strong. So there is always a possible trade to take a short trade at somewhere around after this C period is getting completed. Okay, you could go with via spreads, so you could go with call shorts or put buys with respect to stop losses. Okay, so I'll show that what happened today with respect to the signals that we get from our system. Then later what happened, we started breaking these OTF up. A was up, and B was up, and C was up. D period started breaking that C period low. So that is the first sign of weakness. Then again inside bar, again we started breaking that low. So now we had a tail at the morning. Price coming and consolidating within the tail. So this is another sign of weakness. So when this consolidation was happening within that tail, morning tail, bias was that they will immediately test VPOC. Okay, they tested that VPOC, they printed a poor low. Okay, they tested the morning low, immediately bounced, made a poor low. Poor low is again a weaker reference. Okay, then what happened after a small pullback? Again, they started coming down. And once that poor low is taken out, our target was towards this value area low, somewhere around 22,680 and 22,700. 700 is from market profile price point of value area, and 680 is from volume based value areas. So more or less 680, 700 was the target. So 700 round number. From round number, they started giving a sharp pullback. Then they closed somewhere around here. So by end of the day, what you are getting is that we got a probable FA over here, and by end of the day, we got a confirm that this is an FA. FA is getting confirmed, and it is a neutral extreme down day. What do you mean neutral extreme down day is that both sides of the IB is being taken out. IB high is being taken out, IB low is being taken out, and they are closing near the day low somewhere around. Okay, so this is a sign of weakness. Neutral extreme down day in the sense it is advantage sellers. Okay, advantage sellers. And another one more weakness we can note here is this is a higher value day compared to previous day. This particular profile is having higher value, okay, or kind of overlapping to higher value. But on this overlapping to higher value, price was closing below the value area low. You can see here, or near to the value area low. Okay, price was closing at the lower extreme of the value. So it's also another advantage to sellers. So these are the weaknesses in the market. Okay, so when these things are happening, how could you trade these levels? Okay. Now let us go to our options system. Okay, you can select any strike. This is a trading options setup actually. Whereas this is a simple setup. Okay, nothing to worry about this. Red color and green color candles are displayed over here for easy to take trades. So if you see a green color candle, then it is a buy signal. If you see a red color candle, it is a sell signal. That's all. Once the signal comes, we have to take trades on the next candle open. Okay, and put a stop loss prior to the signal candle. This is a signal candle, right? So like this is a sell signal, and prior to that sell signal candle, we have this candle. So this candle high will be your SL, and this candle opening will be your entry. So the risk that you have to manage. And for each and every sell signal, you would have to trail accordingly. So let's say you got a FA here. Probable FA at around C period closing, that is around 1045, 1046 or 1048, somewhere around. You're looking for a sell signal in any of the call options. Select 22,850, or else I can go and say like 22,800 call. Okay, where is that? 22,800 call 10th April. Okay. So from the market profile, we are getting an information that as a kind of a probable FA is happening at around 10. 46. So look at here, 10:15, you are getting a sell signal over here, but we don't focus on that. But that time we don't have any confirmation that market is going to go down. Okay, so this is giving an advanced indication that okay, 800 call is giving a sell signal. Okay, but at that time we don't know whether that C period will close inside this IB or not. But 10:45, 10:46, you got a confirmation. So we are waiting for a sell signal in 800 call, and you got a sell signal at around 11:50. Okay, you got a buy signal here. We are not taking this buy signal because we are looking for a sell signal only, because we know that markets have given a probable FA. So we got a sell signal somewhere around here. So that was at around 45 rupees somewhere around. So next candle opening 45, 65 or 46, you have to take a trade and put an SL above 49.20. So you don't keep exactly at 49.20, you keep just 10 points above 49.20. Okay, the next follow through sell signal was there. So you can just trail the stop loss below 48.45, this candle high. Okay, then next you got a sell signal here. You can trail your stop loss at around 38. Next you got a sell signal here. You can trail your stop loss at around 29. And after 29, there is no possibility for you to trail because there was no sell signals. There was a buy signal was there, but we don't focus on buy signals because we don't have any valid context to support buying at that point of time. So your SL was 29 or 30 rupees, somewhere around, or 35 rupees, and you have sold at around 45 rupees. 10 points, you are already in profits. And now we are waiting with a stop loss over here. There are no option to trail your stop loss, but you would have exited somewhere around 15, 16, somewhere around you would have exited. Or else if you have a market, if market reverses sharply, you would have exited around 30, 32 rupees somewhere around. We don't know what will happen, but there is no option to trail your stop loss beyond a certain point because there are no signals generated. Got it? So this is how we designed a system based on these price actions. So it will give you a clear indications. So like you want to take a short trade via long puts, then you can go and take 20 to 800 put, or even you can just go to that 22 900 puts. Okay, at the time of this probable FA, you come and check these ITM strikes or ATM strikes, whether you are getting a buy signal or not. Okay, after 10:45. So say like 10:11, we got a buy signal here at around 10:15. That time we don't know that markets are likely to be bearish. So at around after 11 o'clock, we got a sell signal again here. We are not interested in sell signal. We are looking for a buy signal. So this probable FA did not give any buy signals in your puts. That means puts are not interested to go higher. So when the puts demand for puts came, when we started accepting inside this single print, so say like F period, in F period comes at around 11:46 to 12:15. Okay, so you can see some buy signal coming at around 11:50. By 11:50, what happens now? We are forming that F period. F period, the price is accepting inside the single print. So you are getting a buy signal over here. If you want to take a trade, you can take a trade at this candle opening, keeping a stop loss below this candle low, which is around 149. So you keep 10 points below that 149. So you'll get 139 or 135 somewhere around. So the low made was around 148. And again a follow through breakout. And then puts suddenly spiked up. Then again a follow through buy signal. Okay, buy signal. Then your stop loss is somewhere around here. Then it went to 230, then dropped to 180. So this is the problem with buying options. Suddenly there will be a big drop. You might have exited the trade looking at the drop in premiums of 230 to 190, but there was no stop loss trigger because your stop loss was way below 170. Okay, you have taken a trade at around 150 or 160. Your stop loss is now at around this level. When this dip was happening, your stop loss is somewhere around here. And after again a buy signal was there, then you would have trailed your stop loss below this. Then there is a buy signal over here, and your stop loss is around 230 or even lower, 220 somewhere around. So, but one point of time, 220 stop loss was got triggered. Okay, so this is a problem with option buy because you're already at 270. If you want, you can book it out 270. There is no indication that we need to book it at 270 because there is no targets for the system. It's only based on trailing stop losses. So you should ride the entire move. Say like if you keep some targets, you will book the targets and sit idle so that you will not be able to capture the entire move. So there is no targets for the system. It is all about Okay, there was some disturbance. So you see that here you would have exited 270, but you exited 220, right? You missed a 50 point move. That means you're already 50 points profit, but there is no way. Okay, because your exit signal was at around 230, 220. So 220 exited. That's okay. 150, 160 you have taken a trade and you have exited 220. It's decent enough to for a particular trade. Okay, so these are the problems with respect to options buying. Whereas in option selling, you can see that the drop was there from 230 to 190 somewhere around. Okay, so select 30-40 point drop was there, but here during the period of time, like 12:30 to 1 o'clock, it was just a dip of 22.5 to like 30 points. So 8 to 10 points move was there in selling in OTM. Whereas buying in ITM is you have to sit through this move. Okay, so this is the advantage as well as disadvantage with respect to options buying as well as option selling. You can do whatever you want, you can do that, but these are the signal setups, and these setups are something like unique that you will not stop out immediately. Okay, these are designed based on pure price action, so it works well for options selling. The accuracies are somewhere around 90%. You will get an accuracy, whereas options buying it is around 50% only. Okay, 40-50% is only accuracy. Accuracy in the sense, due to these reasons, your stop loss will get. So if the dip stopped at around 184 and then it bounced actually, but what happens if this dip comes and take your stop loss? Okay, you don't know whether this will come and take your stop loss or not. Okay, you got a signal, you took a trade. That's all. You know the risk. You got a stop loss. You calculate your risk, and you could take a trade, right? If there is a market is giving an opportunity for you to trail, you trailed. Okay, then you don't know whether market will come and hit your stop loss or not. If it hits your stop loss, you have to exit the trade. That's all. There is no other if and buts there. Okay, so that is the reason. So if you are afraid to trade in intraday in single directional bias, then what you could do with via spreads. You sell a 20 to 800 call and buy 20 to 900 call, or you buy 20 to 900 put and sell 20 to 700 puts. Something like that. You can sell it based on some levels with respect to index. Say like index goes above this level, I will exit. So based on that, you calculate how much losses you will make. So if that losses are comfortable for you, then go and take a spread trades. Okay, this is with respect to Nifty. And now come with respect to Bank Nifty. Bank Nifty kind of a double distribution kind of profile was there today. Yesterday, you can see here. This was a spike that happened on Friday. So late evening, you had a spike. Next day, spike is getting value to bullish, but it's a kind of a balanced profile. So markets are going higher and you get a wide POC profile or balanced profiles, means there is momentum is not there. Okay, that is indication. So spike was there, that is good. Next day price was spike is getting accepted, that is also a bullish bias, but a balanced profile, that is okay, because as long as spike is there, we could expect okay price to break higher and break this high and go up, because you can see here the high is not, it's not secured one, it's unsecured high. Lows are secured here. Okay, highs are poor highs are unsecured highs, and lows are secured ones. Okay, and today what happened? Today we opened oh sorry. Okay, so today what happened? We opened somewhere around here, near the previous day high. The Nifty there was a gap up, but Bank Nifty I think there was no gap up. Opening gold high was there, exactly to the previous high. This is also a weaker reference. Okay, opening at exact previous high and then coming down. So that was an initial weaker references there was there. So initial weaker references recorded right at the market opening. Okay, initial weaker references recorded right at the market opening, because you cannot have this kind of references coming from an institutional people, or these mostly comes from retail traders. Okay, so this is a weaker reference over here, and they started coming down towards this wide HVN, or we call it as a VPOC, okay, where too much amount of trading activity happened on these levels. So we got a high volume transacted at that area. So we came over here, and from here again there was some kind of responsive buying. Market stood at higher. A, B, C period breakout was there. Okay, then what happened now? After this breakout, market did not sustain above this high, and then again back to back you are getting inside bars. So too many inside bars are there after this C period breakout. But C period breakout, if you have taken a trade based on this breakout, then this particular low will be your SL. Okay, then again this is also making a kind of a short covering profile. Okay, both index are making a short covering profile. So here what happens now? A, B, C, D, E, everything is one time framing up. As long as we are not breaking the previous 30-minute candle low, it's one time framing up. Even if it is an inside bar, it's a one time framing up. So A, B, C, D, E, etc. Everything was one time framing up. And at this point of time, G period is very important. G period, we got a break of the previous candle low. That is F period low. We are breaking in G period. That is somewhere around 12:15 to 12:45. Okay, so that is the time. Bank Nifty also giving a one-time framing down, whereas Nifty also started accepting inside the buying tape. So more or less, both index are coming to a single directional bias. Okay, Nifty was giving signs earlier, but Bank Nifty there was no signs, and we got a confirmation on this by G period when breaking that previous 30-minute low. Okay, got it. After that, what happens now? Then again another inside bar, then again a back-to-back breaking of this one-time framing down. So now what happens now? We are coming into the single print, double print tail. So these are all double print tails. So we started coming inside this tail. We started closing. We came inside this tail. This is another sign of weakness. Once this OTF was breaking and another back-to-back OTF was breaking, then the immediate target was say like this POC or the value area of the previous session. If this value area goes, then ultimate support will be a spike base. So this is your spike base will be your ultimate support. Okay, when this was happening, when this OTF break was happening, I was expecting market to come down to take support at this level, previous day high. Once this previous day high is taken out, then POC will be the support. If this POC goes, then value area low. Step by step it will come. Okay, but sometimes it can finish everything in one candle also. Why? Because this is a balanced profile. So any balanced profile, market can penetrate it very easily. Whereas imbalanced profiles, market cannot do that. Okay, to penetrate into an imbalanced zone, market needs to accept there, consolidate there. Then only they'll break it. Whereas if it is a balanced profile, it can easily penetrate through the balanced profile very easily. Okay, so that is what happened over here. We started coming inside and trading inside this previous day high. They halted there. Once we started coming back inside this well auctioned balanced zone, suddenly there was a drop till this value area. From value area low, there was some kind of responsive buying coming in, and they started going up and closed it somewhere around here. Here also it's a neutral extreme down day. IB high is taken out, IB low is taken out. We closed somewhere around, not a exact neutral day, kind of a neutral center day, you can call it. Okay, neutral extreme means you have to close at the lower extreme, but it closed somewhere around middle of the profile, I think. Not middle, but slightly better close compared to Nifty. Okay, so this is what happened over here. Now, if you want to trade this, again, go to our signals and select whichever strike you want to sell. When you have this one-time framing break, whereas Nifty is accepting inside the single print, this one-time framing break. So let us go and see that 49,000 call or 40, what is that? Yeah, we'll go and see that 49,000 call, any sell signals are getting or not. If there is sell signals, we'll go and trade that. If there is no sell signal, then we don't trade that. Okay, 49,000 call of April tip. Okay, this is the 49,000 call. Okay, the signal has to come at around once this G period breaks. So G period means after 12:15 somewhere around. So this is around 10:45 you are getting a sell signal. Okay, but we don't consider that. We are looking for sell signals only during the G period. Okay, because G period started at around 12:16. So anything after 12:16 is accepted here. So this is at around 12:10. This is at around 12:20. So this is the valid signal for us. 12:20. What do? You select the next candle opening and keep a stop loss way above this 160, maybe 160 or 170 is your SL. You sell it at around 140. So 30-point SL was there in the trade. Okay, then you sold it at around 40, it made a low of 100 rupees. Then there could be bounce at around 136. You cannot trail your stop loss because there is no option to trail. Then you got a follow through sell signal here. Now you can have a trailing stop loss above this. Then you got a sell signal here. You could trail above this. Then you got a sell signal here. You would have trailed above here. And at one point of time, your trailing stop loss might have got hit at somewhere around, say, like 61 plus another hardly 10.71. So this made a high of around 76. So 71, you're out of the trade. You're shorted at around 140 and 70. This is not a bad trade. Okay, it's around 70 points you're getting in this trade. So this is how it works. So here you're getting random buy and sell signals, but we are not interested to take any random trades over here. We are looking at the context. And once the context is showing you that, okay, markets are likely to reverse, and after that you are taking the signals coming in that chart. Okay, so there is no random trade involved. Random trade means you can do any trades. Okay, that also I think if you do it regularly, it will make money. So like you buy here, put an SL over here, SL here, then SL here. You would have stopped at around 120 somewhere around. You would have bought it around, say like you would have bought it around here, 83. You would have exited around 100 rupees. So that also is a profitable trade. Then you would have shorted at around 143, and you would have exited somewhere around 160. And again, 160 you would have bought, would have exited at around 148. Okay, next 146 you sold, you would have got a big bit. So this move is very smooth. Why? Because these are random moves, right? So you're getting a buy signal, then again a sell signal, then again a buy signal, then again a sell signal. So these are all random moves because the context was not clear. Okay, once you see that context is clear, that G period breaking that OTF down. So we have a P-shaped profile in making. Okay, G period is breaking OTF after consolidation. So weakness is there. Plus Nifty is also giving an advance signal. Market is going down. Bank Nifty also joins that. So both index are in the same directional bias, and you get a sell signal from this level. So it's very easy to ride because the signals that you are going to take is based on the context. So you're able to make money. Okay, the same thing you can apply it on any chart. Okay, so these kind of setups will help you to ride the entire move without being stopped out frequently, because you have a clear objective rule where to keep your stop losses. Whenever a sell signal comes, the prior candle high will be your SL. Okay, whenever a buy signal comes, prior candle low will be your SL. Low means they're not exact low. You could give a buffer of 10 points, depends upon the volatility. 10 or 20 points you would have kept. Okay, so this is how it is being designed, and then we have been taking trades based on this setup aligned with the context. Okay, so this is what happened today. Tomorrow, what is likely to happen is that this is a clean distribution on the upside, Bank Nifty. So as long as price does not trade above 48,900, we are not going to take any long trades in Bank Nifty, especially. We are assuming that Bank Nifty will open and consolidate here and break this level. If this low goes, then straight away we'll drop it into spike base. In spike base, there could be some kind of responsive buying coming into the picture. So this is what. So the lowest possible level for expiry you can expect is somewhere around 48,500. Below 48,500, it's a very weak market. Very weak. Okay, below 48,500. And this upper distribution, you have to notice this level. That is where the one-time framing break started in G period. So G period low is very important. So that is coming around 48,900. So 48,900 is bullish to target this FA. Okay, kind of FA. Otherwise, as long as it's below 48,900, they will rotate it down to test 48,500. And if at all we open gap down and go below 48,500, then it's very difficult. Okay, because what I am saying is below 48,500, there is nothing to support the market. We have a clean balance over there. We have only single print tails at 48,150 to 48,50, and I believe these tails are not that strong players. because these tails are inside composite, inside this balance. So I don't give any importance to these tails. So these tails may not support the price. They'll easily collapse it because they are inside the previous day's balance. So if I merge this, okay, if I merge this is what you get. Say like if market breaks today's low, immediate target will be at 48,500. And say, suppose if 48,500 breaks with a big volume or a big order flow information or any significant pattern, you are able to get below 48,500 with volumes wise or price based, big candle close, big volume close, everything is happening, then probably this entire balance is your focus. Entire balance till this 47,900 or 48,000. The entire balance will be a target. So be alert when 48,500 breaks, because you will not get enough time to adjust or even put a stop loss for your trade. That is how markets are designed when we break 48,500, because you see this is a complete, balance over here. When 48,500 goes, straight away they can drop it to this VPOC. VPOC could offer some kind of support, but again, obviously that also will be taken out and we go and target the extreme low. Okay, so there could be some kind of buying coming at around 47,900 because you have another 3-day consolidation over here. You can see here, this is another 3-day balance. Another 3-day balance was here. So you have bigger HVN over here, that is somewhere very close to 47,900. So 47,900, 48,000, probably in this 100-point range, there could be some buying coming into the market. If that level also doesn't hold, then probably we are again to go down towards this particular, somewhere around here, 47,600 or this. So these are the levels, because why I'm saying this, because okay, sudden moves are happening now. So why that happens is because there is always a context behind any particular move. The moves are not just like the random, as what you think. Okay, all the moves are planned moves, and there is a reason behind each and every move in the markets. Most of the moves may not be understood by us, but by analyzing the structure and context of the market, you can guess why that particular move happened. So you can see here, right? 48,500, if it goes, full clean balance. In 30 minutes or within 1 hour time, they can complete the entire balance also. Okay, Bank Nifty is capable of doing that. So 48,500 below, you have to be very, very careful, especially on an expiry day. Okay. So that is with respect to Nifty, Bank Nifty. And Nifty, what is happening here was same scenario. We had this 5-day balance was there. So you mark the consolidation of this 5-day balance. So I just merge these profiles. Okay. I'm merging this 5-day consolidation. So the VPOC of this entire 5-day consolidation comes somewhere around close to 570, and the price based it is coming somewhere around 560, 580 levels. Okay. When this should be targeted is that as long as this upper distribution, this is not a kind of a double distribution, but they have distributed significant amount of positions here, I believe. So as long as we don't trade about 22,800, probably we are looking downside only. Okay, this particular tail can provide some kind of support if it comes down, and if you get an acceptance inside this tail, then destination will be 560, 570. Okay, there could be some kind of buying coming inside here, 560, 570, and they'll be oscillating between 570, 560, and with respect to this buying tail. So 660 to 580 will be oscillation zone. Okay, to decide what should happen next. And if you break this 560, then again we are coming to test this tail zone of this profile, somewhere very close to 460, 420, somewhere around. This is the bias, because the structure is something like that. Okay, we have a 5-day consolidation and the breakout. Okay, but markets are not behaving properly. In the sense you are getting a short covering profile, then a neutral extreme down day. So some kind of profit booking has happened over here, or a kind of distribution might have happened over here. So any longs only about 22,800 targeting this FA. Then beyond that, it's completely bullish. Okay, no questions about that. But as long as it is below 22,800 or 22,780 to 800, it is considered to be weak. Okay, we can test 560, 570. That will be our immediate support zone. Okay, and if the support goes, then we'll go down to 420, 440, 460 levels. Okay, this is the expiry view. Doesn't mean that all these targets will be done during expiry. Okay, this is the bigger picture that we need to keep in mind, because we don't know what happened in markets. Okay, all of a sudden market can go to 560. Within another 5 minutes, it can go to 20 to 800 also. We don't know what is going to happen. So we need to prepare for each and every scenario. So based on the context, you go to the option chart and see whether you're getting a sell signal or a buy signal. Based on that, you can take a trade and put a stop loss, define your risk, and position yourself accordingly. Okay, so this is how we do trades accordingly from the context. Okay, from the context, we are deciding the direction. Okay, simply if you know the direction, you cannot go and take a trade. Okay, because entry and exit, entry, stop loss, risk, everything has to be managed. So for that, we use our entry exit system. Okay, so these entry exit systems will be there so that you can take a trade accordingly. Okay, so all these entry exit systems, market profile, order flow, all these things we'll be teaching to everyone. Those who join our mentorship programs. So we do not conduct mentorships every now and then. We do it once in a year. Okay, maybe mid of the year or end of the year. Normally we'll do it at around May or June or December. Okay, so this time I have decided that whoever comes for a mentorship, they need to pay the initial payment of attending the session. After that, lifetime access will be given. Whoever is interested to trade along with me. Okay, so this will be like a community there. I will be sharing trades and you will be taking trades accordingly, and there is no fees involved for such activity. Okay, so this continues to be a lifelong support. That is what we are planning for our all mentees coming in the June or December. We have not decided whether it will be a June or December. If you want any personalized coaching, one-to-one coaching, okay, personalized coaching or one-to-one coaching, you are not comfortable attending in a group, or I want to attend individually, so that you can contact me individually. Okay, you can comment on this below this YouTube link, where I can get your contact number and I can contact you. Okay, the program will be done in English, but if you have any compulsion to learn it in your local language like Tamil or Malayalam, then personal one-to-one coaching will be done in your own language. So we support English, Malayalam, and Tamil at this point of time, because I know only these 3 languages. Other languages are not supported at this point of time. If you get, if I get any good trainer, I can accommodate a Hindi, Marathi, Gujarati, all other languages. We'll do that. Okay. As of now, this is the scenario, guys. Be prepared for tomorrow's expiry. Wish you all a great success, and I wish you make a hell lot of money trading expiries tomorrow. Okay, I wish there could be enough opportunity for you to make hell lot of money for tomorrow's expiry. Okay, we'll see with another video for next week expiry. Till then, stay tuned. Have a nice day. Thank you all. Bye-bye.
The webinar has ended. Thank you for joining. Goodbye.